It's Monday, February 6, 2023. Markets just closed a little while ago. Markets across the board finish in the red today. And now the markets are getting concerned that the Fed may continue to raise rates, put off the so-called pivot. And you can blame all this on the rigged and manipulated job numbers we received on Friday. The Fed does not want to see a tightening labor market. They want to see the labor market loosening. And with the 500,000+ jobs added last month, according to the data on last Friday, this is going to be bad news for the markets because they know, they're beginning to realize that the Fed is going to continue raising rates. They may go higher than anticipated. They may go longer than anticipated. But those job numbers, as fake, manipulated, and rigged as they were, they are going to cause problems for these markets, as the Fed is going to use those numbers to justify more rate hikes, in my opinion. Now, I want to share a few articles with you today. First one coming from CNN. Janet Yellen, our Treasury Secretary, said this: inflation is declining significantly and the economy is remaining strong. Where in the world does she live? Because it cannot be the United States of America. To call the economy strong, to say that inflation is declining significantly. Now, this is a woman who probably does not pump her own gas, does not go to the grocery store. She has no idea what is going on in the real world. She is so out of touch. She didn't talk about the U.S. savings rate. What is it, 2.2, 2.4%? Does that sound like a strong economy, a strong consumer to you? How about record credit card debt, now passing $930 billion? Pretty soon, we'll be breaking $1 trillion in credit card debt. How about the massive layoffs that we seem to get every day now? How about 70% of this country, or near 70% of this country, living paycheck to paycheck? How about half this country doesn't have $400 saved up for an emergency? And how about most of the workers now, over 50% of U.S. workers now are working more than one job, 2 and 3 jobs, just to make ends meet. Yet Janet Yellen, our Treasury Secretary, says inflation's declining. Go to the grocery store. You know it's not. And she's saying it's declining significantly, and that the economy is remaining strong. Absolutely delusional to even say something like that. It's just so far out of this world. It's Twilight Zone. And then we look at this next article from Fox Business. Dell to cut 6,650 jobs. That's 5% of their workforce because of diminishing demand for the company's computers. So we have inflation going up. We have spending going down. We're seeing a dip in retail spending. This is going to be big, more continued big trouble for the tech industry. So when you have a drop in demand for computers, when you have people that just don't have the discretionary ability to spend like they once did, and spending continuing to dip, it's going to spell more trouble for not just tech, but many sectors across the U.S. Bank of America still forecasting 2023 recession. Fed action not enough, executive warns. This was on Fox Business today, totally contradicting what Janet Yellen is saying. But I believe that we are in a recession right now, and I believe that it is evolving and has been evolving into a very, very serious depression. And what I'm doing is I'm exercising patience. Patience to me is one of the best assets you can have right now. Frank Giustra, who I highly admire, said, I was watching him in an interview the other night. He's in real estate, he's in gold, he's in cash. And that's where he's sitting right now. And I think it's really important now to be defensive, and just wait this out and see what happens, to keep the powder dry, meaning, keep the cash on the sidelines, and, be ready to pounce on deals when they're available. But right now, I think everything pretty much at this point is overvalued. And I think the smart thing to do right now is exercise patience, stockpile cash, make sure you have some gold to protect yourself, and sit back and wait it out and see what takes place here. Small businesses sound the alarm on inflation, energy, supply chain delays, bleeding money. Many small businesses in this country right now are barely surviving. The last number back in December, 41% of small businesses did not pay their rent. What does this tell Janet Yellen? I mean, I cannot believe how absurd she is to say what she did. High inflation, rising interest rates, regulations, ongoing supply chain problems. Today on Fox Business, I was watching an interview with a restaurant owner from San Diego, California. And this list didn't really take into account the rising cost of energy. And this restaurant owner said that their energy bill spiked $6,000 in 1 month, totaling, by the way, a 400% increase, totaling their utility bill to $13,000 for 1 month. How in the world does this owner, this restaurant, survive? Let me repeat that. Their energy bill spiked $6,000 in 1 month to a total of $13,000 for 1 month, ladies and gentlemen. A 400% increase. How in the world does the average small business owner, especially in the restaurant industry, how do they survive? How do they do this? I don't know. And the restaurant's busy, and the person interviewing them said, well, hopefully more people will come to the restaurant, but that just means they use more energy. They're going to use more gas, more electricity, and they're going to have to pay more. So it's not a matter of, having enough people at the restaurant. It's just the overhead to run this business. It seems like a very popular restaurant. It seems like they've been around a long time. Business has been very, very good, and that's not the problem. It's the cost to run the business that is the problem. The overhead. Doesn't matter how many hamburgers or pancakes they sell. The bottom line is, the more they sell, the more energy they're using, the more they're being charged, and it's just an uphill battle here. And it was called Rudford's in San Diego. Here's another one from the Wall Street Journal. Households burn through what's left of their health crisis savings. In many cases, in many households, they've already burned through it. But it says here, according to Goldman Sachs, they forecast by the end of the year, the consumer will have exhausted 65% of their money. I think that's a very conservative number. I would probably agree more with Jamie Dimon from Chase that by June, most Americans will have exhausted all of their savings. Here's one from wolfstreet.com. Delayed reaction. 2-year and 10-year Treasury yields jump, mortgage rates spike. I was just listening to an interview earlier this morning on Fox Business, and they were interviewing a real estate agent. And if you ever want to know what is happening in the real estate industry, don't listen to a real estate agent, especially on one of these financial channels. It could never be a better time to buy a house than today, according to her. But she was talking about how rates are coming down, and it's such a great time to buy because rates are coming down. Well, according to this article that just came out an hour ago, average 30-year fixed mortgage rate now sitting at 6.39%. It went up. We look at 10-year Treasury yield today, up around 11 basis points. That's up 25 basis points since Wednesday. There is no doubt the honeymoon is over. These rigged job numbers that we got on Friday is going to allow the Fed to raise rates yet again. And they can tell us that oh, hey, just the other day, the 30-year was at 5.99. You better hurry and jump in. This is incredible. Never been a better time to buy. Now they're at 6.39. It's still just an incredible time to buy because they're not 7. But yet you are overpaying by so much to buy a house right now. My advice today, I don't give financial advice, but if you were a family member of mine, if you were a good friend of mine, I would advise you not to buy a house right now. And they'll go, well, it's the same price or even cheaper to buy a house versus rent. Yeah, but then they don't tell you about property taxes. You've got to pay property taxes. The real estate agent doesn't tell you when things break, you got to pay for it, not the landlord. So also, you're much more versatile when you rent versus owning, because if you want to buy something, hey, you can give your 30 days or 90 days or whatever notice you have in your contract and bounce and move on to your home or move. What if you get a better job and now you're sitting in this housing market now that is becoming very stagnant and you can't sell your house to go move and take that other job? I mean, there is something to say about renting, the versatility and not being tied down to a 30-year mortgage. And look, and there are times where it makes more sense to own something versus renting. But I don't think it's the end-all, be-all just to own something that you overpaid for. And maybe the rent is the same as a mortgage payment. But again, you're not having to pay taxes on that rental property. You're not having to pay repairs on that rental property. When you want to move, it's going to be much easier to move than being obligated to a 30-year fixed rate and then having to sell that home in a very uncertain market, a very stagnant market where you could lose a lot of money at this point. I think the last article I read, 455,000 homeowners from last year are upside down on their properties right now. So if you had to sell, you would have to come out of pocket in order to close the transaction. Most people can't do that. So they don't tell you when this market continues to deteriorate that when you begin losing more and more equity, the possibility that you could be upside down here, and it's going to be very difficult for a lot of people to sell their homes because they are upside down and would have to come out of pocket to close. Another one from WallStreet.com, cut the price by 20% and they will come. Home builder Meritage explains. This was interesting. Meritage Homes, which specializes in entry-level homes, reported fourth quarter earnings. Sales order volume collapsed by 46% in the fourth quarter year over year. Sales order in terms of dollars collapsed by 52%. 39% of their contracts canceled. So what did they do in January? They cut prices by 20%, and they said that they're now seeing an uptick in orders. So that's what it took in order to get orders. They had to cut prices 20% to get an uptick in sales orders. So I think that we're going to see a lot more of that, a lot more incentives, a lot more price cutting. So that tells me that this market the housing market has a long way to go down. And I'm going to finish with this last article from The Hedge. Italy's internet restored after nationwide outage. Reports of global ransomware attack. So just a reminder to all of you, be very, very cautious where you're keeping your money. Be very cautious that you have some money put aside that you can get to, because we're going to see more of these cyber attacks, ransomware attacks, glitches. This affected the entire country of Italy. Only 26% of their internet was operating the other day. And just think, and I know it's hard for people to really fathom this, but just think that if your banking system went down, if you could not get on the app, if you could not use your ATM, if you could not pull money out of the bank, if you couldn't see your bank balance, if you couldn't deposit checks, you couldn't withdraw money, what would you do? What would you do? And luckily this was fixed quickly. But we're going to see a time in our life where we're going to see massive damage done by this kind of technology, where people are not going to be able to get their money out. So be safe. And think a little bit for yourself that what if, like what if this happened? What if that happened? What if the power went out? What if the water went out? What if I couldn't go to the grocery store? Are you prepared for these what ifs? It's very likely that these type of attacks are going to become more and more severe. They're becoming more and more common. So prepare for them. Put some money aside. I'm not telling you to take all your money out of the bank. That's up to you. But have enough reserves, maybe for a week, maybe for 2 weeks. Me personally, I don't like keeping all my money in the bank. I have enough to pay the bills. I have enough to do some transactions. That's it. The rest of it is in other places that I can get to, that I can access very, very quickly. I don't trust the banks. I don't like the banks. The reason we're in the problems we are right now, much of this you could blame the banks for. And so be careful where you keep your money. Be careful using safe deposit boxes and keeping your assets in those. I mean, we've heard one nightmare after another. At the end of the day, be your own central bank. Be responsible for you. I think it's going to work out a lot better for you. I'm going to leave it there today. God bless all of you. I look forward to speaking with all of you very, very soon. And please make sure to give this video a thumbs up. Like this video. Make sure to share all of my videos, and make sure you subscribe. God bless.